Hi everyone, I am Jay Shah and welcome to the next video of Basics of Stock Market. So this is going to be a relatively shorter video. So relatively shorter compared to the previous videos which I have made in this series, Basics of Stock Market. But this is an important video. Okay. So now before starting this video, I want to show you this share of Angel One. Okay. So here you can see this date is 8th of December 2020. Okay, so here the price is around, so here you can see the prices, which is the OHLC's open, high, low and close, right? So the prices you can see is ranging like 360 to 380 rupees, right? Now if you come over here, so you can see the price is like around 280, 290 in that ranges, right? So from this 8th of December until 15th April, this price fluctuated, like, you know, it did not change very significantly, right? So it's fluctuating between like 380 to it is a significant change, I mean, but it's like a sideways movement, right? It's not increasing by a significant amount, or it's not even decreasing by a significant amount, right? So it's fluctuating between 380 and here it is around I would say 280, 290, right? Now notice what happened after this. The price suddenly increased, and in the next 2 months the stock price was tripled. So this date is 15th of April 2021. The price is, you can see here, it's around 300 rupees, even less than that, right? And just see over here, this is 19th July 2021 and the price is more than 1300 rupees. It has even reached the high of 1475 rupees, right? So from 15th April to 19th July, so just 2 months, just 4 days more than that. So just in 2 months, the price has gone from less than 300 rupees to a highest price of 1475 rupees. It's not even triple, it's like 300, and this is close to less than 1500, right? So almost 5 times, right? It has even gone up further over here, like it has gone down, but again it went further up over here, right? So just see the significant increase in such a short duration of time, right? So now here you can see on 15th April, and this notice this date, which is important, which is 16th of April, right? Now why is this date so important? So here you can see what is written as volume. Okay, these graphs which you can see down, these are volumes. Okay, so now you can see the number over here whenever I go to this particular things. So the volume you can see is 80,000, 240,000, that is 2,40,000, something like that. And suddenly notice on 16th of April, the volume is 1.14 million, right? So suddenly the volume has increased. Now what is volume? So now this is the share of Angel One. So some people want to buy the share of Angel One, some people want to sell their share of Angel One. So let's say that this was one transaction in which I bought and someone else sold. So this was a share transaction for, let's say, 100 shares. Another was a transaction for, let's say, 200 shares, where somebody else bought, somebody else sold. So this was a transaction for 100 shares. This was a transaction for 200 shares. Similarly, total number of transactions which are happening only for this particular stock. So here you can see the volume is 1.14 million. So these many total number of shares were bought and sold. Okay, so now it's not like I am buying 100 shares and this person is, so I am buying 100 shares and this person is selling 100 shares. So it's not like 100 plus 100, the volume is 2000. No, here the volume is according to one transaction, right? So one transaction, I am buying, someone is selling, the transaction is for 100 shares. Similarly, combining all the transaction, the total volume for this one day is 1.14 million, right? And here you can see the volume was very less, but in this one day, the volume suddenly spiked and even the share price increased. Okay, so here you can see the increase or decrease and the percentage. So if I go to 16th April, the price increased by 8.72% in a single day, right? So now why does this thing happen is the point of today's video, right? So let's go to the next segment of the video where I'll explain you why this thing happens. Now, before coming to the reason of why such things happen, so I want to introduce you to who are the types of investors in the stock market. Okay, so I want to introduce you to the market participants, right? Who are the people who are participating in the stock market? So I've already introduced you about SEBI, the broker, and everything like that in one particular video, which was, the title was T+2, how the T+2 settlement happens, right? So that video talks about you buy a share, someone else is selling the share. So the shares transfer from this person to this person, and the money transfers from this person to this person. How does this transfer actually happen through the NSE and BSE? That is what I've talked about in that video, right? But in today's video, I want to understand what are the different types of investors, right? Now, investor and trader is a very different thing, but let's call everyone who buys or sells shares in the stock market as investor. Okay, so there are 4 types of investors that you need to understand. The first one is called as retail individual investors, that is RII in short form, right? Retail investors, that is people like you and me, normal people, right? Who invest in the stock market like some part of a salary or whatever it is, right? The next comes high net worth individuals, that is called as HNI, right? So the name itself suggests high net worth. So these people invest a lot of money into the stock market. That is a very heavy amount in the stock market. Now, the next 2 types are the most important types, perhaps. The people who impact the prices of the stock market, and they are, one is known as FII and one is known as DII, right? You must have heard these terms in the news and in the business magazines and in the financial newsletters and stuff like that. So FII is foreign institutional investors and DII is domestic institutional investors, right? So these are like financial institutions which have like crores and crores of rupees of money, right? And these people invest or trade, let's say invest, these people invest this money in the stock market, right? Now, why is it important to know these 4 types? Okay, so first of all, what is the difference between domestic institutional investors and foreign institutional investors? The name itself suggests, right? Domestic is like, if you're talking about the Indian stock market, so the institutions that are in India, like the mutual funds and everything, like there can be even the foreign mutual funds, but so foreign, like whenever we're talking about FII, so there are certain rules and regulations, like everyone cannot invest. Like if you are someone who is not an Indian, you are a foreigner or you are a foreign institution, not a foreigner I should say, you are a foreign institution. So there are many rules and regulations when you invest in the Indian stock market, right? So whenever these foreign institutions invest, so it's called like FII, and the Indian institutions, they are like known as DII, that is domestic institutional investors. Now, you must have heard in the news and everything that today FII sold so many worth of shares and DII bought this many worth of shares and stuff like that, because these things are important to know. Okay, now why is it important to know? See, at the end of the day, what stock market investing, trading, all of this, what it boils down to is predicting whether the price is going to go up or predicting whether the price is going to go down. Okay, now how is the price affected? By demand and supply. I have already explained to you, right, in my LTP video. So now tell me one thing. Normal people like us will invest like 5,000, 10,000, 50,000, 1 lakh, 2 lakh rupees of in the stock market, or like whatever is the amount. Like let's consider maximum to be 1 crore. Now consider a financial institution who is investing like 100 crores in the stock market. So now you tell me that now imagine that institution wants to take the price of a share. So let's say price is at 100, the share price is at 100 rupees right now. That financial institution wants that the price should go to 120 or 30, let's say. So how can they do it? They need to increase the demand of the share. Now, who can do it easily? People who are investing like 1 lakh, 2 lakh, such kind of amount in the stock market, or people having 100 crores of money in the stock, like people investing 100 crores of money in the stock market? Obviously, people having 100 crores of money, right? Because with those 100 crores, they can buy so many number of shares that it will affect the demand and the supply of a particular share, right? So let's say they are having a huge number of shares, and they sold 100 crore worth of shares. So now the supply of the shares has increased, right? So because these people have, or these institutions have like such a huge amount of money, they buy and sell huge number of shares, right? So that is why it affects the stock prices so significantly, right? So like I showed to you over here also. Here you can see the volume was like very less, and suddenly one day you can see the volume 1.14 million, right? And here the volumes were like, you can see 61,000, 31,000, 54,000, and here suddenly one day 1.14 million. Again you can see a big spike in the volume over here, 5.033 million, right? So whenever you will see this big spike in volume, it is usually an institutional investor or an institution which has either bought a huge number of shares or they have sold a huge number of shares. And whenever such a thing happens, on that day the price will either fall by a significant amount, or the price will either fall by a significant amount, or the price will either increase by a significant amount, right? So this day you can see a very good volume compared to the previous days. So now notice the percentage over here, right? So you can see on the single day the share price has increased by 8.72%. Again here you can see the spike in the volume. So here even more, 12.36% in a single day, right? Let me show you another example, right? You can see over here this big red in the volume, right? So okay, this is not so significant. Right, see this, you can see these big spikes in the volume, right? So this spike you can see 17th March. On a single day, the volume increased by 14.23%. The price increased by 14.23%, right? 200 points this on a single day. Again, here you can see this also 17.54% in a single day, right? So this is the reason why these institutions which have, so you can see the live example over here. You can see all the other shares in the stock market. You will find similar things. But whenever there is such a huge volume, there is usually either the price will fall by too much, or either the price is going to increase by too much, right? Now, one important thing which comes over here is like there are, you must have heard about some people who are known as operators, or so people indulge in some kind of unethical or illegal sort of activities. And what they do is, let's say that they want to take the price of a share, like let's say that again the same example, the price is at 100 rupees and they have invested a heavy amount into that share, and they want that the price should go to, let's say, 150, and then we'll sell off whatever we have bought at 100 rupees. We'll sell that at 150 rupees. So that way we'll make 50% profit, right? So now what they will do to make this, so they need to increase the demand. So what they'll do, they'll spread fake rumors about the company, that this company is going to do foreign expansion, this company is going to get this offer, or like many rumors are spread about the company. Once the price goes up to that price, they will sell off, and the stock price will see a huge correction and a downfall in the price, right? There are even some promoters of the company who do this. Okay, so promoter is the person who is like the the owner of the company, or the person who has started the company. Okay. So now let's say that the promoter wants to sell his stake in the company, and he wants to sell it in the stock market. So what he'll do is, now he's selling his stake. So what he wants, that I want to sell my share at as high price as possible. So again, he'll take the help of some institutions, or maybe he'll take the help of some other channels, and he'll do whatever he can to increase the okay, not all promoters do this. Okay, majority of the promoters do not do this, but there are some. Okay, let's not get into that. Okay, so what he'll do is, he'll inflate the price of the share and then he'll sell his stake. Now let's say that the promoter wants to buy more stake in the company. Let's say that he has 30% stake currently, and he wants to increase his stake to 35%. So now now he's buying the shares. So what does he want? I want to buy it as cheap price as possible. So now what he'll do, he'll spread rumors, or he'll do whatever he can to decrease, or to so that the price of his company stock falls down. Once the price falls down to a level which he wants, after that he'll buy huge number of shares and he'll increase his stake from whatever percentage he wants, right? So there are many such practices which go on in the market. But the important thing for today's video, which was to understand, is, like I told you, you already know that demand and supply affects the stock prices. But whenever the money of some big financial institutions or anything comes anything like that comes into the picture, the stock prices either move by, they move by a big amount, either they move upside or either they move downside, right? So this is an important section of moneycontrol.com which I want to show you. So this is under the section of deals, and here you can see block deals and bulk deals, right? So here it's written, you can see transaction of a minimum quantity of either 5 lakh shares, or the value of the shares traded is more than 5 crore. So if someone has traded with more than 5 lakh rupees of shares, or a value of more than rupees 5 crore, then the disclosure you can see over here, right? If you go to any particular share, Infosys, Reliance, TCS, or any particular share, you can see this under this section which is known as deals. So this is known as a block deal. Okay, so a large number of shares are traded over here. So you can find, you can search about it and you can find out that what is happening regarding to whichever share concerns you, right? So this column is known as bulk deal, which is under the same deals only. And here also you can see where a bulk deal is where the total quantity of the shares bought or sold is more than 0.5% of the equity shares of a company listed, right? So I have explained to you about the company's capital structure. So if it is more than 0.5% of the equity shares, so here you can see the quantities are like, you know, you need to count the number of digits, number of zeros, right? So if the quantity is more than 0.5%, so this quantity divided by how many total number of shares the company has. If that is more than 0.5%, then again you'll find the disclosure over here, right? So block deals and bulk deals. So for this, it is either less than minimum value of 5 lakh shares or a minimum value of rupees 5 crore, and here 0.5% of the equity shares of the company. Similarly, here you can find about this column is insider and SAST. So in this column also you will find some disclosures, but these disclosures are mandatory according to the SEBI. Right, and here you will generally find, not for all companies, but for some companies you'll find that whether the promoter of the company has been buying or selling the shares, and like promoter or any other people related to that. So those disclosures you will find under this insider transaction summary, right, under this insider and SAST, right. So these two columns are important from that point of view, right. So deals and insider transaction summary. So this is on moneycontrol.com. And you can find this for every share that you want, like Infosys, TCS, Reliance, and you can check out that what are such big transactions that have happened, in which like, you know, the share which you have bought or sold or which you are planning to buy or sell, right? So yeah, this was an important section of moneycontrol.com which will help you in this context. So I wanted to show this to you. So this was all that I wanted to explain in today's video. I hope that this video is short, like I'm not measuring the time or anything. Like whenever I just record a video, I just think of whatever I want to think of the points that whatever I want to explain in today's video, and I just go on explaining whatever I feel important, right? Because I want the person watching it for he's understanding about the stock market for the first time, he should understand it in as easy manner or as easy language as possible, right? So that is my intention. So yeah, so I try to make the video short, but whenever something like it's important to explain something, then the video might go a little bit longer, right? But anyways, so I hope this video was at least short. So yeah, anyways, so that's all for today's video. I'll see you in the next video. Till then, bye bye.